Welcome to Move to Chattanooga. I'm Robert C. Baker, a real estate agent with Zach Taylor Chattanooga, and in this video we're going to dive into what the 2024 presidential election means for real estate. While the final vote tally has not been tabulated, it appears that Donald J. Trump has won the U.S. presidential election and will take office Monday, January 20th. In the video, we'll look at some of his policy goals and objectives and, importantly, how they could shape the real estate market over the next 4 years. We'll cover key topics like interest rates, housing costs, employment and home prices, and how they affect anyone buying, selling, or investing in real estate, especially here in the greater Chattanooga, Tennessee area. If you're interested in learning more about Chattanooga, just log on to my website, movetochattanooga.com. First, let's talk about why election outcomes are important for real estate. Presidents don't control the real estate market directly, but the policies they champion, tax changes, economic stimulus, infrastructure investments, regulations, set a tone and influence key economic indicators that directly impact the housing market. Presidential administrations shape the financial landscape in ways that affect everyone from first-time home buyers to home sellers to commercial property investors. With that in mind, let's examine some of Trump's main policy goals and explore how each could affect the real estate market. Trump's policy priorities have historically focused on tax cuts, deregulation, and a pro-business approach. Once he assumes office, in addition to other policy objectives championed by folks such as Elon Musk, Robert Kennedy Jr., and Tulsi Gabbard, we'd likely see a continuation or even an intensification of Trump's traditional emphases in his second term. One of his key policy priorities will likely be tax reform. Trump has previously advocated for lower corporate taxes, further tax cuts for individuals, and incentives to keep businesses on U.S. soil. By reducing taxes, his administration will likely aim to stimulate economic growth, arguing that more disposable income will lead to greater consumer spending and business investment. On the topic of taxes and why we should take all campaign rhetoric with a grain of salt, or maybe the entire salt shaker, Trump has put forward the possibility of no taxes on tips, Social Security, and even overtime work. Of course, the president may propose such things, but the purse strings are held by Congress, and apart from applicable executive orders, any of these measures potentially would have to be approved by both houses before receiving the president's signature. Another major objective would likely be deregulation. Trump's past efforts to reduce regulations, especially in industries like energy and construction, reflect his belief that cutting red tape frees up businesses to operate more efficiently and cost-effectively. For real estate, this might mean fewer restrictions on construction, which could increase housing supply. Lastly, Trump may pursue policies aimed at reshoring jobs to the U.S. He has previously used tariffs and trade negotiations to encourage companies to bring manufacturing jobs back to the U.S. Increased domestic employment and industry growth could have several knock-on effects in the housing market, especially if manufacturing hubs grow in previously quieter areas. Now, let's talk about interest rates. Under Trump's first term, the U.S. Federal Reserve faced political pressure to keep rates low. When Trump returns to office, there may be similar pressures again, especially if he seeks to bolster economic growth. In Trump's favor is the current Federal Reserve program to gradually reduce the Fed funds rate over the next several months. The Fed funds rate is the overnight lending rate charged by banks that directly influences home equity lines of credit, car loans, credit card rates, and some student loans. That said, while the Fed funds rate does not directly impact mortgage interest rates, it indirectly influences them. For the past several weeks, as of the date of this video, mortgage interest rates have actually risen following the Fed's September Fed funds rate reduction of 50 basis points. Election fervor and other factors have taken a hold of the financial markets, including U.S. Treasuries, which have seen yields sharply increase. We'll know more about the direction of the 10-year Treasury yield and mortgage interest rates when things simmer down a bit. Low interest rates generally make borrowing cheaper, which can spur home buying by making mortgages more affordable. For buyers in Chattanooga or relocating from high-cost states, low rates means the ability to secure a lower monthly payment, potentially increasing demand. But with more buyers competing for properties, prices could also rise. Conversely, if mortgage interest rates were to remain high, which may happen under a Trump presidency, the impact would be felt across the board. Higher interest rates typically slow down home purchases as borrowing housing becomes more expensive. Sellers may find fewer buyers, which could lead to longer listing times. For those relocating to Tennessee, where we've seen a steady influx of out-of-state buyers, continued higher rates could temper demand as well as put downward pressure on prices, especially with increasing days on market. Another aspect of low interest rates is refinancing. If rates were to reverse course and fall again, homeowners could refinancing, unlocking home equity or lowering their payments. This can increase disposable income, which often boosts consumer spending, a potential boon to the economy. On the flip side, continued higher interest rates could keep refinancing activity very low by reducing the extra capital homeowners have. In Chattanooga, where people are drawn to lower cost housing and strong value appreciation, this could slow down the current enthusiasm for buying or upgrading homes. Next up is housing affordability. Trump's deregulation approach might aim to reduce construction costs, making it easier and cheaper to build new homes. For buyers, this could lead to a boost in supply, helping to address affordability by slowing the rapid price increases we've seen in recent years. However, if deregulation is paired with low interest rates, we might see an increase in speculative buying as investors take advantage of low borrowing costs to purchase properties. This could further drive up home prices in desirable areas, making affordability a continued challenge for first-time home buyers and for those with moderate incomes. In Chattanooga, which is seeing higher inventory, new construction spurred by deregulation could bring further inventory to the market. This, of course, would affect prices. But the key challenge would remain balancing affordability with growth. A Trump administration's potential focus on housing deregulation could encourage more supply, but demand pressure would still drive up prices. Trump's economic agenda will likely focus heavily on job creation, particularly through tax cuts, infrastructure spending, and a focus on American manufacturing. Job growth has a direct impact on housing markets. More employment and higher wages typically mean more people who are financially capable of buying homes. In Chattanooga, where there's a mix of tech, manufacturing, and service industries, an emphasis on job creation could attract more workers to the area. This in turn would fuel demand for housing, especially in areas with job growth. For real estate professionals like myself, a growing population means a dynamic market, but it also means increased competition for buyers. Sellers might enjoy rising home values, but buyers could face more challenges finding affordable options. One possible risk, though, is that efforts to reshore jobs can lead to price increases on imported goods. If tariffs are introduced as Trump has promised, construction materials like lumber and steel could become more expensive, which would drive up the cost of building new homes. This might offset some of the gains from deregulation by making housing construction pricier. Trump's business-friendly policies could influence the dynamics of property values across the country. If tax cuts and deregulation lead to a more active economy, we may see continued rising home prices driven by increased demand. This, of course, would affect affordability. However, lower interest rates could also feed this trend, making it easier for more people to afford homes, thus increasing buyer competition. For Chattanooga specifically, a continued influx of relocators, something we've been experiencing, would likely mean home prices remain on the rise. Real estate markets that are popular among retirees, investors, or out-of-state buyers from higher-cost areas could see accelerated growth. As a real estate professional here, this scenario underscores the importance of helping my clients understand how these market shifts may affect their buying or selling decisions. The global economy plays a big role in the U.S. real estate market, and Trump's potential trade policies could have far-reaching effects. If trade tensions rise with countries like China, and as I mentioned earlier, if tariffs are introduced, this could impact the availability and cost of construction materials and goods. Rising costs on imported materials may slow down construction, tightening housing supply and potentially driving up costs. Higher material prices could also affect affordability. In Chattanooga, where many buyers are relocating from out of state, higher construction costs could make new builds more expensive. This might push some buyers toward the resale market, increasing demand for existing homes. Trump's tax policies would likely aim to benefit real estate investors as they did during his previous term. Policies that favor capital gains tax cuts and other tax incentives for real estate investors could encourage more investment in the market. For Chattanooga, this could mean more interest in rental properties or commercial real estate. For those considering rental investments, tax incentives could improve profitability. However, if we see a greater influx of investors, that may mean higher competition in the residential market as more people purchase property properties for rental income. This demand could drive up prices further, benefiting sellers but posing a challenge for primary home buyers. Finally, let's consider overall market volatility. With any election outcome, there's always a level of uncertainty as policies take shape and are implemented. In a Trump presidency, markets may experience a mix of optimism and volatility, especially given the strong emphasis on pro-business policies. While this can spur investment, it also means the real estate market may be susceptible to swings based on policy announcements or economic data. As a real estate agent, my role would be to keep my clients informed about the local impact of these policies. For both buyers and sellers, it's critical to stay updated on how these macroeconomic shifts are playing out at the ground level. In a market like Chattanooga, where buyers may be especially sensitive to changes, navigating these dynamics would be essential. To wrap up, a Trump presidency could bring a mix of benefits and challenges to the real estate market. Policies focused on low interest rates, deregulation, and tax cuts might stimulate growth and create opportunities, especially for investors and those in high demand regions like the greater Chattanooga, Tennessee area. However, it's essential to stay informed about potential affordability challenges, inflation risks, and the impact of trade policies on building costs. For anyone considering buying, selling, or investing, it's a great time to be thoughtful about your decisions and work closely with a real estate professional who can offer insights tailored to your needs. As always, I'm here to provide you with expertise, transparency, and guidance in Chattanooga's evolving real estate market. Thinking about moving to Chattanooga? Watch this video next.